Have you ever heard somebody say that they don't want to get that raise or that bonus because now they're going to lose money now that they move into a different tax bracket? I hear this all the time, and after talking to hundreds of different people about their taxes, I think it has to be the biggest myth or misconception around taxes I see. Most people just don't understand how our tax brackets work. Now, it's perfectly reasonable that they don't. We're never taught it. Nobody ever talks about it. We don't talk about it in school, right? We're just sent off on our way to figure out taxes at some point in the future. Okay, so to start, remember that we're all given a layer of deductions on our taxes. You can take one of two different deductions. You can take the itemized or the standard deduction. About 90% of people take the standard deduction, so realize that that's like you never earned that income. If our standard deduction is $29,200, first $29,200 you earn, you will not pay tax on at the federal level. And then any money earned above that flows onto what's called our marginal tax brackets. Now, it's important to remember this, and this is the big misconception. We have a progressive tax system here in the United States. So you're going to pay a portion of your money in different tax brackets, not all in one bracket. That's where people go wrong when they think they're going to lose money all of a sudden by getting a raise if they move in the next bracket, thinking, oh, all my money's now going to be taxed at a higher rate. That's not how it works. So let's go through what these brackets are and how it actually works. So after you've had your deduction, right, itemized or standard deduction, you're going to flow through onto these different tax brackets. So this is for a married couple filing jointly in 2024. So here's where things are going to sit for this upcoming tax year here. So the first $0 to $23,200 you earn is going to pay 10% at the federal level. So in this bracket, you are going to pay $2,320. Now, any money you earn above $23,200 to $94,300, that chunk of money is going to pay 12%. And only that chunk of money is going to pay 12%. Remember, it's not as if all of a sudden you earn $25,000 if all of your taxes pay 12%. Nope, only the money above $23,200 will pay 12%. Once you earn over $94,300, the money earned above that will now pay 22%. And that will be the same thing up until just over $200,000. And now you can see it flow all down. So what I did is I put together just a sample tax report of somebody that earns just over $400,000 to show you where they would fall. So what this shows is, again, they are going to pay 10% on the first $23,200, and then 12 on this money, 22 on this money, 24 on this money, and then 32% is their marginal bracket. You hear that a lot, especially when you're filing your taxes. You might hear, here's your marginal rate, here's your effective rate. The marginal rate is trying to explain to you what bracket that last dollar you earned was taxed in, and it's going to help show you what's going to happen on the next dollar you earned. So on this sample person here earning $400,000, basically from $383,900 to their 402 number, that money paid 32%. And you can see that they still have $85,000 that they could be earning, and that will still be taxed in the 32% federal bracket before they move up to the 35%. Now, it's really important to review your taxes and what's going on because this changes all the time. These brackets here I'm showing you on the left, the marginal brackets, are set to go up in 2026 once the Tax Cuts and Jobs Act from 2017 sunsets. So each of these, so for example, the 12% bracket's going to become the 15%, the 22 will become the 25, and so on. Also, these ordinary income thresholds I'm showing you here, these get adjusted each year, generally for inflation. And then the third thing is your income is going to change and fluctuate. So as you're thinking about taxes, just remember it's a progressive system. You don't pay one bracket all the way across all of your money. And remember that these change. So take a look at your income, how it might vary over time. Understand how marginal brackets are going to change and how these thresholds change. And that can help determine what the best tax planning decisions for you are, whether it be contributing to Roth IRAs or contributing to a Roth 401k and pre-tax 401ks or HSAs, and just trying to understand how your taxes might change and evolve. It's very hard to do long-term tax projections because nobody knows where tax rates will be in the future, and nobody knows necessarily what their living situation, their income or expenses will be that far in the future. But it's really beneficial to check in on this on an annual basis and just understand where you stand and what things could potentially be done to make sure you're optimizing your taxes now and preparing for the future. Thanks for watching. I'm Peter Campbell, the lead advisor at Bull Oak. We're an independent financial planning firm based in San Diego, but we work with clients all across the country. If you want to learn more about how we help our clients, check us out at bulloak.com. Thanks.